What is cracking YouTube? It's your boy Raj with MondernWealth. Today I wanted to talk about my techniques I use for day trading, which you can also use if you're trading long term. It works either way, but there was a perfect example today where I just have to show you how this stuff actually works and it can help you make some money. I use smart money technique, ICT trading, inner circle trading, basically trading what institutions do, money makers and the billionaires. This is how they trade. This is the techniques that they use. So you always want to bet with them. They have the money, they manipulate the market. They're basically the house at the casino. So imagine you can go to a casino and you can bet with the house. You'd be winning money. This is what I do day in and day out to make some money. And hopefully you can learn this too. This is just an example. Nvidia today, July 10th. I had a negative bias for this stock just from all the news, and Nvidia hit $4 trillion yesterday, so it's been running up a lot. It's due for a pullback, right? So today, each candle is a minute. This is the minute time frame. So each candle is 1 minute. It started out the first 5 minutes in a negative downturn. So I wanted to buy a put option, meaning I was betting that it's going to go lower. But I don't want to buy it now after it's been going down a little bit, because stocks, they move in waves, right? They go up, down, just like traffic, stop, go, stop, go. That's just how the market moves. So I'm waiting for what we call a retracement. So it's going down and it's retracing back up to get some more steam to go back down. So I was thinking that I want to buy put options on the retracement so I can ride this wave down. So this is what the smart money is doing. Right here, the first 5 minutes in this green candle is showing that it's going back up. And this candle right here shows that it's breaking structure. The body is closing over this wick, meaning the structure is going upwards. So when I see that, I'm going to use a Fibonacci retracement on the short-term high and the short-term low. So institutions, they want to buy at a discount, meaning they want to buy above this 50% level. So as you can see, the candles hit this 50% level perfectly, and then it starts going right back down, showing me another sign that this is a retracement and it's going to go right back down. The money makers are pushing the stock downward. So most people would buy right here because it's going down, but I do not. I want to see another confirmation. I don't want to gamble. I don't want to guess unless I have several confluences. So another one I use is a fair value gap. So this gap right here on this candle, let me zoom in a little bit. This body right here has no wicks to the left or to the right of it, meaning there's an imbalance in this candle. A lot of people bought up right here, leaving a gap. So this, on the downward turn, disrespected this gap. It broke right through it. And this is called a inverse value gap. So this inverse fair value gap is going to show me that another confluence, meaning that it's going to go downwards even more. The money makers are pushing it down, and this was my second confirmation that I was right. It's going downwards. So I made a trade right here buying puts. So I'm betting it's going to go down, and lo and behold, 5 minutes later, it is going down. So the next problem I have is, when do I take profits? When do I get out? Because I want to go in and out really quick. So usually I would look for support levels, but there weren't. If you look over here in the previous day or before that, there's no support levels here. So I'm going to use the Fibonacci extension, and that's going to help me find a place to take profit. So I hit the Fibonacci extension, I put it at the high, and I put it at the low, and it's going to extend down here. I'll change the color so you can see it better. So this is the white mark. This is the extension. Usually institutions like to start taking profit at the 61% level. And right here is where I took profit. As soon as it hit this, you couldn't have drawn it any better. The retracement hit 50% exactly. There was a confirmation with an inverse fair value gap that is going lower. And then I took profits at 61%, where institutions like to do the same thing. This was an easy $700 day I made in less than 20 minutes. You can learn this stuff You can do day trading like I do, or you can even use it to find entries in a stock that you love that you want to keep forever, or exits at a stock to take some profits off the table. You can do this. This is easy. Inverse value gaps, inverse fair value gaps, order blocks, liquidity sweeps. This is all things you can learn, and over time you can use it to make some money. Subscribe to my channel. I'm going to start making videos about this stuff. There's a lot of videos on YouTube about it already, but it's hard. They don't explain it like human. It's hard to understand at times. Hopefully I did a little better at explaining it. I'll teach you some more as the time goes, guys. Peace.